Hello everyone, welcome back to part 5 of our lecture on mergers and acquisitions, and here I want to talk about one specific acquisition, namely the acquisition of Antonveneta by Dutch bank ABN AMRO. So why do I want to talk about this acquisition specifically? Well, because it's an acquisition that I know a little bit about, because I studied it a little bit during my PhD. So I have some stuff lying around like presentation slides to kind of get a little bit of a feeling of hey, what was the thinking at the time? And secondly, because well, this acquisition was a horrible acquisition that was very bad for all parties involved. So hopefully we can learn a little bit from the mistakes that were made, or maybe there weren't any mistakes made, but it was just bad luck. But let's see if we can learn anything. So let's first give a little background into the case. So what was happening at the time? So this was 2005. So a couple of years after the introduction of the euro, and ABN AMRO acquired this bank, so Banca Antonveneta Popolare Veneta. So sorry for butchering your language for any Italians that are listening. And this was a very long fight. So there were years and years where the head of the Italian central bank, so let's say the Klaas Knot of Italy at the time, he blocked this acquisition because he didn't want the Dutch people to take over this bank, likely because then there was one less bank for him to supervise. So this was a prolonged legal battle. It took a long time. And then after years and years, finally ABN AMRO was able to take over Antonveneta. And this was celebrated as a huge success at the time, but eventually led to, well, if you want to believe this book right here, led to the fall of ABN AMRO. So this book is quite a page turner, takes about 100 pages or so, and this book attributes a large part of taking over Antonveneta to ABN AMRO's fall and eventually nationalization. But it was a very exciting story, yeah? So like this story of hey, there's the Dutch people trying to take over the Italian market, and these central bank directors not really playing by the rules. So at the time, this takeover was seen as a huge success. So here you see the cover of the Elsevier, where Rijkman Groening, so the CEO of ABN AMRO at the time, was celebrated as the Dutch Person of the Year. So the Nederlander van het jaar, the Dutch Person of the Year. With a subtitle here, Lefgozer die Italië veroverde, so the daredevil that conquered Italy. And at the time, this was seen as this great thing that ABN AMRO did, and it was consistent with the thinking of banking markets at the time. Remember, this was a couple of years after the introduction of the euro, so everyone at the time thought, hey, we're moving towards this so-called end game. So even before Marvel envisioned the end game with Thanos and whatever and whatnot, there was already this talking of an end game in the banking world, where they said, hey, eventually we're going to move to a world where there's a couple of big banks that dominate the market, and those dominate the entire European market, and there's not really any room for any mid-sized banks that only provide services for a single European market, because they will be outcompeted by the sheer scale of those insanely big banks. And then maybe there's some room for smallish, specialized niche companies, but mostly it's going to be these really big banks. So everyone at the time was looking to consolidate and to take over smaller banks to just grow and grow and grow. Of course, if we look back now in 2021 to what actually happened, of course, there was a financial crisis in between, so people didn't really foresee that. So maybe that affected what happened, but by and large, if you look at the European banking market, it's still very much a national market, right? So you have national banks within the Netherlands, you have national banks within Germany, national banks within France, and there is some cross-border activity, but by and large, these markets are still very, very national. So this was thinking at the time, so everyone thought, hey, great idea, and we can also take a little bit of a look into the thought process of the specifics regarding acquiring Antonveneta. So here I have some slides from a presentation by Gianluca Santi. who gives us a little bit of an idea of, hey, what's going on in this integration of Antonveneta into ABN AMRO. So this guy, Gianluca Santi, he's the head of the corporate strategy and integration project. So more or less, this is the guy that's really in charge of everything. And what I want to look at here is, hey, what are kind of the arguments that are put forth in terms of how to make this into a success story, and to kind of try and get some shorthand answers to whether or not the numbers that are attached to these synergies actually make sense. And so here there's some priorities. So what is going on? So what do they need to do? Well, of course they need to They need to do a transition, make sure there's continuity, and then increase the performance and deliver cost and revenue synergies and plug into the ABN AMRO structure. So this is really where the additional increase in value comes from. But this reads more as this reads more as a control story, where you say, hey, we are going to apply the ABN AMRO structure to Antonveneta. So rather than saying, hey, there's this specialized resource that Antonveneta has that we can now use better as ABN AMRO, they're going to say, hey, we're simply going to take our business model of ABN AMRO, put it on Antonveneta, and that will increase their performance. So more or less like a control type of story. And then we can see, hey, does this control type of story, does it actually make sense if we look at the numbers? So first off, let's look first at the revenue synergies. So what are some of the revenue synergies that are projected? So here we see that in 2007-2008, they expect somewhat of a big growth. So for instance, here they say we're going to have some business growth above the market of 60 and 180. How are they going to do that? Well, by leveraging group capabilities and implementing a new service model and product offering. So a bit vague, but more or less, yeah, we're simply going to offer all the products that we're offering as ABN AMRO, but now we're going to offer them to the Italian market through Antonveneta, and that is going to drive growth. So also note here that whenever you read something like, hey, we're going to create above market growth, that growth is typically going to be somewhat hard to acquire, right? Because you are then, if you're simply growing in accordance with the market, well, then yeah, that's all fine and dandy. But if you want to grow above the market, then either you need to find new products to deliver to customers. Well, in the banking world, can happen, is maybe not so likely, or you will need to take market share away from your competitors, and that's going to be costly. But let's first look at some of the numbers here. So what are some of the revenue synergies? So what is going to be additional revenue for Antonveneta given that ABN AMRO took over Antonveneta? Are these numbers of 100 and 250 million euros, are those realistic? Well, let's take a look at the annual report for 2004. Just to give a little bit of a base of, hey, what do our revenues actually look like? Well, the revenues here in 2004 are about 2.2 billion. So increasing that with 250 million is an increase of about 10%, which is within the realm of possibility. But yeah, so I can't immediately say, hey, this is completely unrealistic, but it does seem high-ish, but not completely outside of the realm of possibility. So in this case, yeah, revenue synergies, okay, yeah, maybe, why not? Then what about cost synergies? So cost synergies we can approach in multiple ways. So one way to look at them is to take ABN AMRO's cost structure and then look at how does ABN AMRO's cost structure compare to Antonveneta's cost structure. So in this case, for instance, what we can do is look for ABN AMRO's operating margin in 2004 and compare it to Antonveneta's 2004 operating margin. And then we can get somewhat of an estimate of, hey, what would happen if we take ABN AMRO's cost structure, apply it to Antonveneta's cost structure, what are the savings in terms of costs. So let's try and do that. So let's, and with that I mean let's you guys do that. So if you look at ABN AMRO's profit margin before taxes in 2004, what is it? And then I'll give you a little hint, because in general these banking balance, these banking income statements, yeah, it's always a bit of a riddle what you need to take in terms of revenue. But in this case, I would take the operating income here as the revenue for ABN AMRO. So alternatively, you could also take the interest income and then ignore the interest expense, take the fee and commission income and then ignore the expense. But it's somewhat common in banking to simply take for income, so for revenue, the net interest income, the net fee income, the net trading income, etc. So with that said, what is the pre-tax? So let me add that. So pre-tax. What is ABN AMRO's pre-tax profit margin in 2004? And there I get a value of 16.6%. So if we take this as revenues right here, and then we have operating profit before taxes of 3.26 billion, then I get a value of about 16.6%. So 16.6% profit margin before taxes. Let's apply that to Antonveneta, and then my question to you is, what is the annual value of control if ABN AMRO manages to change the operating margin right here? And there I get a value of 12. So if we look at the total revenues here for Antonveneta, multiply that by 16.6%, then we get a value of 371. And then if we compare that to operating profit before taxes, then we get a value of 359. So the difference here is about 12. So we can expect, so if we look at the cost structure for Antonveneta from this approach, then we can expect a change in operating performance of about 12 or so. So let's see how this compares to what ABN AMRO foresees. So this 12 is exactly equal to, well, this 2006 number, but then they expect, hey, these cost synergies to really take effect, to really increase over time. So this seems a bit puzzling, given that, hey, the profit margin for ABN AMRO is 16.6%. So if you assume that this profit is going to go really is going to increase by a lot for Antonveneta, you're kind of expecting Antonveneta to do a lot better than ABN AMRO actually does itself. So that becomes a bit of a puzzle. So of course it can happen, but without additional information, this just doesn't seem all that realistic. So maybe we can do better, right? Maybe we can look more in depth into what is the cost structure of ABN AMRO, what's the cost structure of Antonveneta, and maybe we can take into account that ABN AMRO is simply this bigger bank, so it has some economies of scale there. So let's ask ourselves, given this cost structure for ABN AMRO, is it realistic to see a certain improvement in Antonveneta's cost structure? And for this, what I want to look at is mainly the personnel expenses. So more or less the story that you can tell here is, as banks increase in size, typically you don't need your personnel doesn't need to grow with the same amount of size. So given that we have computers to do the administration, it's typically the same for a person to administer, let's say, 100 mortgages or 1,000 mortgages. So as you scale up, you simply need less personnel. And you see this a little bit in the cost structure for ABN AMRO compared to Antonveneta, especially in 2005. So for instance here, if you look at personnel expenses and SG&A, so other non-personnel administrative expenses, you see that this for ABN AMRO is about 5.8 to 4.7, and for Antonveneta this is about 7.4 to 4.3. So it seems like ABN AMRO is doing a better job in terms of keeping its personnel costs low. So this could be a reason where you say, hey, ABN AMRO has this increase in scale, so maybe we can apply that to Antonveneta as well, fire some people and run this business more efficiently. So, and you see a little bit of this, right? Because even over time, so if you look at 2006, so after the takeover by ABN AMRO, you see that the personnel expenses really go down by a lot. So it seems as if indeed there is something happening there. So let's calculate what value we can expect from that. So given that ABN AMRO has personnel expenses that are about 125% of these other non-personnel administrative expenses, and Antonveneta has total non-personnel administrative expenses of 435, what would be your approximate estimate for personnel cost savings? And here I get a value of 198. So how do I do that? Well, right now we have personnel expenses of 746. And then if we subtract, hey, what would be our personnel expenses if these personnel expenses would be 125.7% of these 435, then we get a value of 198. So about 200 million euro. So this is a big chunk of savings, and in principle, yeah, maybe if ABN AMRO is able to realize that, yeah, then yeah, these would be some cost savings that ABN AMRO can expect. So, and this is more or less in line with the cost savings that ABN AMRO projected at the time. So if you look at cost synergies, that, well, even though there were only 12, so let's say 12 here in the first quarter of 2006, eventually within 2 years, or less than 2 years, so this is a year and a half, right? Because you're in Q3 here, so this is in 1.5 years. ABN AMRO expects to realize all these cost savings. So here you have to put some pretty hard question marks, because what do these cost synergies consist of? Well, likely you want to get rid of some personnel, but of course it's very hard to get rid of personnel, right? Because, well, we live in Europe where we have some job stability, so that's both a good thing because, well, it's nice to have a steady job. But if you're trying to optimize a firm, well, this is of course going to make it a bit harder to optimize the value of the firm, because you cannot get rid of people all that easily. So likely what you're going to need to do is to put up some voluntary way for people to resign. And if people can resign voluntarily, it's also highly unlikely that the worst people resign first. It's highly likely that the best people resign first. So this is super optimistic in terms of the time that you're going to take to get these cost synergies, and it's also super optimistic on the value of these cost synergies, because, well, highly likely you are going to have to offer some benefits package for leaving the firm, and then your best people leave. So that means that, yeah, it's you're actually not going to save that much money as you maybe initially project. And this you also see in terms of restructuring costs that ABN AMRO that ABN AMRO projected. So first off, of course, it's a great thing to have to take into account that restructuring takes time and takes money. But it seems as if this is a very short time to plan for a certain integration. So they expect, well, most of the integration costs will fall into the first 2 years. And then in 2008 already, there's hardly any integration costs anymore. Rebranding is something we're going to do. It's going to take 1 year. Then immediately everyone knows, hey, Antonveneta is ABN AMRO now. Of course, that's also somewhat questionable. And the cost of control, well, they take a bit longer, so that is good to have there. But all in all, I would say, yeah, these costs seem low-ish and seem short-ish in terms of what you can expect. So if we then continue to the accountability, so there is some accountability here, which is a great thing. So it's great to have accountability for deliveries of these synergies. However, if you then look at who is accountable, well, there's the Antonveneta management team and the head office representatives. They are together responsible for this delivery of these synergies. So what you immediately know is going to happen is if this is not delivered, these guys are going to say, no, it's these guys' fault. These guys will say, no, it's these guys' fault. So make sure that the one person is responsible. And that is actually something that is done here in the short-term performance. And I'll show you in just a moment that indeed this worked very well in terms of holding these people accountable. But again, having, like, let's say unit heads or business and segment leaders, well, what's going to happen if this if something is not realized? Unit head from one unit will say, no, it's not my fault, it's the fault of all the other unit leaders. So make sure that it's more transparent who is accountable. And the Antonveneta team actually did really well in that first year. So if you compare the result between 2005 and 2006, you see almost a fourfold increase in terms of their net income. So, but if you then delve a little deeper, you can see what are some of the big posts that make sure that this happens, right? So we can first look at the net interest income, actually goes down a little bit. Net commissions also stay approximately the same. But then there's some stuff going on here. There's some stuff going on here that really drives. So in this case, the net income and other net interest and other banking income. So here you see an increase of about 200 million. And if we look at some of the big posts where that comes from, one of the biggest is the profit on disposal of certain financial assets available for sale. So this is really a one-off thing, so where you simply dispose a lot of financial assets that are available for sale. You make one-time profit, which is of course great, but is also something that is, well, maybe not reproducible year after year after year. Then let's look at what are some other things that drive this final result. So we already see that here there's about 125 or so. And then let's also see what happens to what are some other things that really drive this result. We also see that there's less of a write-off for impaired loans. So we see between 2005 and 2006, we see that first there was this write-off of about 300 million in loans, and now it's only about 200 million. So in principle, this can of course be the case, right? So as a bank, from year to year, you'll sometimes write off a lot of loans, sometimes you won't write off a lot of loans. So if you write off a lot of loans, that is, well, of course bad, because you have these loans that were impaired, they weren't paid anymore. So that you're taking a loss on those, but then at least you have some capital available to invest in new business. What you can do is kind of make some changes into when you're writing off loans. So for instance, you can kind of ease up on the criteria there. So I don't know exactly if this is what happened, but one thing that Antonveneta here could have done to kind of avoid these write-offs for impaired loans is to simply say, hey, we're not going to send letters if people don't pay after 60 days. No, we're not. We're only going to start sending letters after 90 days. We're not going to start threatening them with legal action until 120 days. No, we're going to take 150 days or so. And what will immediately happen is that your impaired loans will decrease, and that seems to be exactly what is going on here. So even though you see this great result, if you look at a couple of these drivers, so of course there's always going to be a lot of things that drive this result. There are these two items that are really, well, if they're not, it doesn't have to be that they're manipulated, but these posts, they really lend themselves well for manipulating a final result. And if you as Antonveneta management are responsible for creating certain short-term target, otherwise you're fired, then, well, it becomes very likely that you will make this target, and then you start looking for opportunities to make this target. And if you then look at hey, what actually happens from 2006 and 2007, then you see that these one-time items, like for instance here the disposal of these financial assets held for sale, then that goes back to a more normal level in 2007 compared to 2006. And hey, what do you know, in 2007, all of a sudden the write-offs for impaired loans are back to about 300 million from 200 million. And the net final result is back to way, way lower once again. So this to me gives an impression that hey, the Antonveneta management did everything it could to hit the target that was set by ABN AMRO, but maybe the target was not met by increasing efficiency all that much, but rather by taking temporary measures that ensured that these targets were met. Of course, I don't know the entire story, right? So take it with a grain of salt. So after this takeover, what was the aftermath? So of course, this was right before the financial crisis, and the financial crisis hit ABN AMRO big. But even if there wasn't a financial crisis, you could ask yourself, hey, was this takeover really implemented really well? Because the story at the time was that after the takeover, ABN AMRO left Antonveneta more or less alone. So it more or less said, hey, now we did the takeover, Rijkman Groening became Dutch Person of the Year, but after that, we're not really interested. You guys can just keep on running your bank as you always have. But take this with a little bit of salt, because I get this information from The Perfect Prey, which is a book that Rijkman Groening himself describes as pure fiction. So, of course, Rijkman Groening doesn't really come off as a really great guy from this book, so there's also a reason why he thinks it may be pure fiction. But keep in mind that, yeah, take this with a little bit of a grain of salt. But if you then go further into the future, so into the financial crisis, then yeah, Antonveneta really seems to have cursed this bank, because in 2007 ABN AMRO itself was acquired and split up into three parts. So RBS got the investment banking parts, and RBS was nationalized in 2008, so did really badly. Fortis took over the Dutch parts of ABN AMRO, was nationalized in 2008, so the ABN AMRO that we know nowadays is the Dutch part of what was Fortis at that time. And then Santander seems to have done fairly well in getting the Latin American parts of ABN AMRO and Antonveneta, but Antonveneta seems to have been this problem child from then on, even so. Because it sold Antonveneta to Banca Monte dei Paschi di Siena, and that bank had, well, some troubles along the way as well, and was bailed out by the Italian government in 2017. So it seems like yeah, the ghost of ABN AMRO haunts Europe's banks. So then, of course, we want to know, hey, what can we learn from Antonveneta, even if ABN AMRO failed? Is there anything that we can see, even coming into the merger acquisition, that we could have maybe predicted that it didn't go all that well? Well, the lessons that we can learn here is, first off, make sure that you're undertaking this acquisition for the right reason. So is it really value adding, or is there an alternative motive? So for instance here, maybe question marks should have been put towards this end game model for Europe's banks. And yeah, maybe growing in size should have been a second motive behind simply growing more valuable. If your acquisition is motivated by synergies, make a realistic estimate for the value of those synergies. So it seems as if ABN AMRO did get some of the numbers really right in terms of hey, what you can expect, but then really underestimated what the costs are for combining these organizations. One thing that maybe would have been really nice here is to consider using scenarios where they say, hey, there's going to be a scenario where it's really easy to get all the cost synergies. There's going to be a scenario where it just takes very, very long time to get those cost synergies. And there may be a third scenario which would be close to what actually happened, where it just goes completely horribly wrong. Yeah, make sure that when you have this synergy, that you actually make a detailed plan on how you're going to create this synergy. Because, for instance, stuff like, hey, we're going to fire a bunch of people. Yeah, that is likely going to be the result of creating cost synergies sounds all nice and dandy until you realize that, hey, cost synergies might mean that we need to fire people. Firing people is going to be costly. We're going to lose the best people, not the worst people. So following through on that and making a more detailed plan will give you better insight into, hey, how exactly do I expect my synergies to manifest themselves? And then follow up on the merger, so make sure that people are accountable, so make a single person, single division accountable, and then actually follow through to make sure that the synergy actually gets delivered. All right, so that's it on synergies and our example on ABN AMRO Antonveneta. Hopefully it was useful. Next, I'm going to talk about something about the factors that affect M&A value. See you there.